This is Matthew Cratter from Trader University, and today I want to talk about whether the Bitcoin bull market is actually over. I've been getting a lot of questions about this. I think the strongest argument that it is indeed over is the chart damage that we've sustained over the past few days. We can see that for most of this bull market, the price of Bitcoin has stayed above the blue line here, which is the 50-day moving average. We did finally begin to break below that in early April. We had we sold off below it, had a quick bounce back above the 50-day moving average. The 50-day moving average, which had functioned as support, began to function as resistance right here at the beginning of May, and then we really plummeted it down. And the strongest bearish argument here is that we're below the 200-day moving average, which has now begun to function as more of a resistance level, whereas before it was a support level. And again, it's very rare in a bull market to go below the 200-day moving average. In the 2017 bull market in Bitcoin, we never went below the 200-day moving average. We stayed above the blue line, and when we finally did get below the red line, which is the 200-day moving average, this was in early February of 2018. We finally had a couple closes below the 200-day moving average, a quick snap back up to the 50-day moving average, and then we also had another bearish signal, which was the 50-day moving average crossing below the 200-day moving average. And once that happened, it was pretty much lights out. The early indication of this was that it was the close below the 200-day moving average. And then we got the confirmation with the 50-day closing below the 200. And then, as we can see, Bitcoin entered a multi-year bear market. So that's the bearish argument. Now, if we go back and look at the 2013 bull market in Bitcoin, and of course these bull markets always happen they're initiated at the Bitcoin halving, which happens every 4 years. So that's why you're seeing these sort of 4-year numbers. The 2013 bull market, a lot of people don't talk about, but it was a very interesting one in that it had two phases. It had the early run-up at the beginning of 2013 when the price of Bitcoin just went up enormously. It went from, call it $10 up to roughly $250, $260 per Bitcoin. And then it came crashing down over the course of just a few days in April of 2013. This is one example of a time when we did, that summer of 2013, we did get a close below the red line, the 200-day moving average. Just closed below it, it looks like 2 separate days, and then rallied back very, very strongly. We never got that crossover of the 50-day moving average, the blue line, crossing below the 200-day moving average. And so this bull market stayed intact, and after going from $250 all the way down to, call it the high 60s or the mid 60s, it then bounced very strongly and went on to go up more than 4x the previous height, the previous top or the previous high from earlier in the year. So the previous high was call it $260 per Bitcoin. It went well over $1,100 per Bitcoin. Later that year, just call it 7 or 8 months later. So for those who say that we cannot go from having crashed down from 65,000 down to 30,000, saying we can't go to 288,000, I think the analogous thing here this year would be going to 4x the previous height, so call it $250,000, $260,000 per Bitcoin. And the very strong impulse phase really happened later in the year, and then of course it peaked in December of 2013. Seems to be a common month for Bitcoin to peak. Actually peaked at the beginning of December in 2013. Raoul Pal has a great tweet here with a chart of Bitcoin's current price, which is the white line. You can see the sharp sell-off of the last few weeks. Compared to Bitcoin's price action, he does this really from the beginning of 2010, so it's maybe slightly misleading in terms of the starting point. Nevertheless, we can see that we're tracking fairly well here in terms of this double top that we were talking about in 2013. And what the next step up here is really, call it, I'd say about $300,000 later this year. So I still have my price target of $200,000 later this year. I do not think that we're in a bear market. I don't think it's transitioned. I'm going to give you a couple reasons for that. But before I do, if you're finding this video helpful so far, please hit that subscribe and like button, and maybe share this video with a few of your friends who are interested in Bitcoin or cryptocurrency. Now, why do I think that the bull market is not over? Well, for one thing, the macro backdrop is very different this time around. There's huge quantitative easing going on. There's huge money printing. The Fed is monetizing the deficit. So this is a huge tailwind for scarce and hard assets like Bitcoin. Plan B had a couple of interesting tweets. We can see that the black line here is his model price, and that we've really fallen off to the lower part of the dark blue band. If you want a bigger version of this is the stock to flow model chart. The blue line is the model price, and here we are. These are our monthly closes falling off. The nice thing about this chart is I think you can select part of it, and then you can scan in and take a closer look. The actual model price that we're at now, using one of the more common 463 day moving averages of the model price, the current fair value using this model for Bitcoin is just above 61,000. So we're well below the model price. As we can see here, we are still within those two blue bands. So these are the bands right here that we were talking about. Plan B has an interesting tweet. Actual Bitcoin price is at the lower bound of stock to flow model. So that lower band or bond is 30,000. Model price around 60,000. Upper band 120,000. So Plan B is saying it's not okay if we stay at 32,000 for multiple months. He expects it to bounce back off this lower band. We can see that historically this has been a really good buying point to buy below, to buy right when the price of Bitcoin touches this lower band, especially in a bull market. So that would be one validation that the stock to flow model has not been violated yet. Plan B has some interesting on-chain analysis, which it looks like he's doing more and more of, talking about what really happened in May from a big picture perspective. We have here this, I don't know what color this is, this kind of purple April color, and then this dark red May color, and then the various price levels that they were bought at. So what happened in May, according to Plan B, looking at actual addresses on the Bitcoin blockchain, Wecan sold about 1 million Bitcoin at the range that we've been trading at the last week or so, 30,000 to 35,000. And these are the same coins that they bought between 55,000 and 60,000. And so what we've seen here is a rotation of Bitcoin from very high net worth weak hands into strong hands. And this is really accounts for a lot of the selling, as well as the deleveraging that we've been seeing on the derivatives exchanges. Great tweet here from Dylan Leclerc using the same chart from Myrmicon Capital that we've referred to a few times. This is the red line is the price of the percentage change in gold price in Weimar Reichsmark, which was the currency that was hyperinflated in the early 20s. And what this shows is it shows the price of gold in this fiat currency going from 1 to call it $1 trillion, but in a very volatile manner. The red line is the monthly changes. So there are many really big down months, big up months. This is very similar to what we've been seeing with Bitcoin. And if you used any leverage at all with gold in the Weimar Republic, you would not have been able to participate. Just the volatility was too high. But if you just hodled gold in the 1920s in Weimar, you would have done very well. So this is an argument that Bitcoin is doing something different. Obviously, we probably won't see wheelbarrows full of cash to buy a loaf of bread in the US. The Reichsmark was not the global reserve currency back then as the US dollar is today. But I think it's an interesting analogy, and it shows that you can have really big run-ups, even with the kind of volatility that we're seeing in Bitcoin these days. This is a chart superimposing the value of one Bitcoin with this German Reichsmark gold chart. The red line here is the price of Bitcoin, and you can see here that we're at the point, if this is true, that Bitcoin really has the potential to go parabolic. The reason for this, the fundamental reason for this, is the money printing and the need to monetize U.S. deficit spending. And this is a tailwind that is not going to go away. We're going to have to inflate our way out of the current debt mess, really globally. In terms of fundamental development, that's another thing to keep an eye on in terms of increasing Bitcoin adoption. And here's a great chart of the Bitcoin Lightning Network 3 years ago. Not very many nodes and connections. Now, all over the world, beaming money all around the world on this second layer solution, which is instantaneous and has very, very low transaction costs. It all settles on the Bitcoin blockchain. But this is the kind of build out we're seeing that looks very much like the original build out of the internet. Internet stocks were very volatile. They went through a terrible bear market from 2000 to 2002. But the real survivors, companies like Apple and Amazon, went on to go up many, many times from there. If you'd been trading Amazon with leverage, you probably would have gotten knocked out of the game and not been around for the huge price appreciation of the last 2 decades. Another reason to be bullish on Bitcoin is we've seen this flip among all the investment banks. We've talked a lot about this. Goldman Sachs in 2020 saying that Bitcoin and other cryptocurrencies are not an asset class because they don't generate cash flow, etc. Now talking about cryptocurrency as a new asset class. I suppose this could be interpreted 2 ways. One, that when Goldman Sachs finally gets around to pushing something, it's a little late in the game. I'm not sure that's the case in this case. I think we are objectively very early. And when we look at the kind of growth that's surrounding Bitcoin in terms of adoption by banks and by regulators, I think we're still very early. And for once, Goldman Sachs is a little bit early too. Really amazing quote I wanted to finish with by Ross Stevens from the NYDIG. Ross is a very experienced industry veteran who started at Goldman Sachs, has a PhD in finance and statistics, and is the founder and executive chairman of the NYDIG, which provides all this institutional support for cryptocurrencies, especially Bitcoin. In an interview, he said that on Saturday he talked with the heads of the 3 largest central banks in the world about U.S. inflation and Bitcoin. This is incredible. So he must be talking with the head of the Federal Reserve, the ECB in Europe, and the Bank of Japan in Japan, the BOJ, which is their central bank. 3 of the largest. Maybe it's not those exact 3, but this is an amazing quote that follows from a guy who is not really given to hyperbole. He's a very solid guy with a long track record. I'd guess there's a 50-50 chance that a central bank declares Bitcoin either legal tender, in which means it would be accepted for all economic transactions, or the reserve for the central bank where they store their value within the next 12 months. Now, someone like this is not just a random Twitter account. This is someone who's deeply connected, who is talking with central bankers. And it's most likely that the central bank that first adopts Bitcoin is not going to be one of the big 3 or even the big 10. But if any bank does it, you initiate a game theory escalation where all the other central banks need to buy it. And in situations like this, you don't want to be the last one to buy, as we've seen with the Bitcoin run-up over the past 12 months as well. I'm going to be on the road again, and the place I'll be staying is not going to have a strong internet, unfortunately, internet connection. So I'm not going to be making a video tomorrow on Tuesday, but I hope on Wednesday it looks like there is a strong internet connection there. So expect the next video from me Wednesday of this week. In the meantime, stay strong, huddle on. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.